Welcome back. Let's talk about market fundamentals. Rakshit Ranjan, portfolio manager at Marcellus Investment Managers, now joins in. Rakshit, morning. While you don't select stocks based on the index levels, you do watch it, what's happening in the global markets and the impact, the rub-off in the Indian markets. What have you made of the turmoil that we are seeing in the US markets, in Europe, and India's resilience?
Yeah, sure. So I think there are two or three things that we keep observing. One, India being a far more domestic economy, both on the demand as well as to an extent on the supply side, rather than significant global connections in order to run the economy. So to that extent, there is resilience. There is a little bit of less impact from the global macro. But also there are two very significant offsetting factors that we see in the listed universe. One, the China plus one story, or shifting of a lot of economic activity towards India from some of the other economies in the B2B sectors, etc. That's I think a very big tailwind to some companies that are benefiting from it, which is an offset against the adverse global macro. Secondly, in the last 2 years, there have been too many opportunities to deploy capital in ways that you could not have deployed in a normal environment, and thereby upgrade the sort of prospects of free cash generation over the next 3 to 5 years. That's a very big offset. When you combine these two together, I think the importance of global macro reduces, particularly in the way we look at things here to pick up stocks.
Okay. Hi, Rakshit. Morning. So what are the sectors which are looking attractive right now? I mean, are there, I'm sure there are pockets where things are looking good. So what is it that is appealing to you?
Yeah, but particularly, I think the theme rather than the sector, I would call it. The theme that looks attractive to us is where a lot of IT investments and tech investments have been done by businesses in the last 2 or 3 years, both at the front end or the back end as in manufacturing, etc. Front end would be on the distribution sales side. These tech investments are actually transitioning some of the companies from being traditional businesses to new age businesses, quote unquote, right? And that's a massive theme which us. At the same time, there are a few tailwinds as an offshoot of the macro, where competitive intensity used to be high when the money was freely available to private equity, venture capital funded companies, etc. And now, since those funding taps have started to dry up a little, competitive intensity has actually become a lot more rational rather than irrational. And hence, when you combine these two or three things together, the theme that emerges then is a set of companies which are incredibly favorably affected by the external environment these days.
Would you like to name some of these companies?
Well, quite a few. I mean, so take some of the examples from, let's say, our portfolio, and all of these companies our families, our clients are invested in. So Bajaj Finance has transitioned very meaningfully over the last 2-3 years from a traditional lender towards a lot more fintech than it was previously. There are companies such as Page Industries, Pidilite, where the front end distribution was the traditional manual intervention till 2-3 years ago, and today it is fully automated. I mean, auto replenishment systems and demand forecasting, the way they're working, it's no less than a pure tech-based company would be operating in some of those attractive sectors. And say, let's look at companies such as Asian Paints. The kind of work that they're doing on home decor, right, is something which is transitioning the business's growth prospects in future. So these are things that Dr. Lal PathLabs acquiring Suburban and sort of growing Invest. This is the capital allocation which otherwise would not have happened in a normal environment at such a rapid pace.
But Rakshit, most of these, if not all, are these large caps. Aren't you venturing into the mid-cap space? Isn't there enough opportunity there?
There are. So whether you look at large, mid, or small, the opportunities that we see are with companies that have already got established dominance, and on the back of that dominance, they're leveraging onto onto these investments, these capital allocation disciplines. So rather than sort of finding such opportunities in companies which were the fourth largest or fifth largest in the sector and might become the largest in future, that's not the mid-cap that we are finding attractive. The mid-cap we are finding attractive is sort of businesses which are mid-cap just because they are dominant in relatively smaller sectors, but following the same theme.
The recent correction that we've seen, or the volatility that we've seen, has also given you a lot of opportunity to load up on your favorite stocks. Can you tell us some of the recent purchases, say in the last 1 or 2 months?
Yeah, sure. So about a month ago, we loaded up on Divi's Labs. Early last month, we loaded up on Divi's Labs. And again, disclaimer, so Divi's is in our portfolio, our families, our clients. We have a significant exposure. So Divi's Labs was one where we loaded up because there were concerns which we thought were a little more short-term oriented, which were bringing the share price down, and that created an opportunity. 2 or 3 months ago, it was Titan, where there was, I think, government's gold import duty increase, customs duty on gold import was increased, and the share price took beating. So every time we see such opportunities, we load up on that. Having said that, I think in the last 3-4 months, the volatility for high quality businesses' share prices has been a lot lower than the broader market, unlike what was happening in the first 6 months of this calendar year.
So anything in the mid-cap space?
Yeah, in the mid-cap space as well. I mean, continue to be very, very upbeat about companies such as, say, GMM Pfaudler, Anelkai Lamines, Page Industries, even Berger. Right? These are the mid-caps that we're quite excited about. And again, disclaimer, heavily exposed to all
any stocks, new stocks, which are on your watch list as potential entrants into your consistent compounders list? And can you tell us a little bit more about that?
Yeah, so can't name those stocks until we end up buying them. It'll be unfair to our clients in case we end up buying them in future. But yes, the pipeline is a lot healthier today than it was, say, 2 years ago. And the reason for that is, to begin with, think of it like this. In the last 12 to 18 months, the kind of churn that we've seen in our existing portfolios in terms of entry exits, right, of stocks is a little higher than the churn that we've seen over the longer term in a normal environment. And the reason for that, again, is that many companies which otherwise were not able to capitalize on too many opportunities have found many of those ways to capitalize on opportunities in the last 2-3 years, whether it be through acquisitions, through tech investments, through sort of just benefiting from some of the macro themes that are playing out, etc. So yes, the pipeline of new stocks has become healthier, longer than it was till 2-3 years ago.
All right, Rakshit, thanks very much for your time today and for taking us through your outlook for the market. By the way, the Dow futures recovered, and with that, we also bring you great news for investors, because if you're